April 10th, 2024. It's going to be a wave trading process with entries and exits, talking about 5 wave moves. We'll cover body gaps and how long gaps are valid, and engulfing bodies, and use of options and open interest volume. So Delta Airlines reported earnings this morning, and I thought I'd use this as a stock just to show the wave trading process and how you can use it too in your trading. So I'm going to zoom out here, and right here where this blue light bulb is, you can see where this is where the earnings data was reported, and then price shot up. This was at basically 4:23 Mountain Standard Time, so 6:23 Eastern Standard Time, and then price pulled back until market open. So what I've done here is these blue lines. I'll zoom in and show you this. This blue line represents a gap between the candle close and the candle open. So I'm ignoring the next candle's tail or wick. I'm only looking for the body gap. That body gap doesn't get filled here or on the second candle, and so that gap remains open and valid as a target. Here, there's another gap. The candle closes here and opens on the next candle here. Yeah, you have a wick that touches, or tail that touches, but once again, there's no secondary wick that has filled or body that has filled that gap yet, so that gap is valid and open. So these become targets for price to go to. I'm going to zoom back out, scroll to the right, and you can see I stopped drawing this line here because you can see this blue line intersects this green candle here, so that gap is no longer valid. And then there's a gap that was created right here. And let me zoom out a little bit, and you can see that that gap gets filled with this tail right here. And then that third blue line, which I showed, which was this gap here, gets intersected by this candle body right here. So these gaps have been filled and they're no longer valid. There's a gap, I'll zoom in, there's a gap up here between these two bodies, which is the yellow line, so I'll zoom into that. You can see that a little bit better. Here you can see this gap right here. So I have a script in Thinkorswim that plots this orange wedge if there's a gap between the bodies. Same thing with a gap that's going up. You see this blue cyan wedge. It just represents a gap between the bodies. So let's zoom out. The candle colors here are the green and the red represent pivot points over a 10-minute time period, so a low and a high. And if price continues to trend, then the pivot point won't be plotted precisely at 10 minutes. It can be plotted much later than 10 minutes. So here's the first 1-minute candle. Here, right here, this very large gray candle. Zoom into this. So we've got a target up here for price to get to. And then, so that's target 1 to the long side. Now, price goes up, pulls back a little bit, and puts in a gap. You see that gap indicated by this gold-colored wedge. So this is candle body under candle body. But yet we still have this 1-minute candle here. So I don't really count this as a wave. My wave actually just begins right here. If you watched my yesterday's video, you can go back a few minutes, look for the most recent signal candle. And here was the last signal candle 2 minutes before market opened up. And that low, the low of that candle is at 47.7. And the low of this candle is at 47.1. So if you got long anywhere in here and used this as your stop, 1 penny below that, you didn't get stopped out on that tail. So price goes up and then starts rolling over. So how do we know that price is no longer going up? Let me zoom into this. We know this because we see candle body under candle body. So here, this hammer candle, 2 minutes later, you get this candle body under this doji. So yeah, I mean, it's clear and obvious that price is going down, but by technical definition, this is what I use to determine if price is either going up or down. So at this point in time, price has stopped trending up, it's going down. And then price keeps trending down until we have candle body over candle body. So all of these candle bodies are to an extent intersecting a candle body to the right. So there is no candle body. There's a gap here, but that's back to the left. There is no candle body above, like there's no candle body above this. So we're still creating this wave one down. So at this point, I don't know if price is going to go up. I don't know if price is going to go down. I need to see the first wave created before I'm interested in a trade. So I will document this wave here. So this is our high of the morning. I'll put this as just wave one. And then I'll duplicate this. And this will be our bottom. This is the end of wave one. How do I know that this is the end of wave one? Well, I take my lowest body candle, smallest and lowest body candle, which is this gray one here. And here we have candle body over candle body. So this terminates mathematically that price is going down. Now price is going up. So in order to be confident that this isn't just a wave one down and price is going to go back up, we need to see price go up and not break the previous wave high, in this case previous wave one. So I'm scroll a little bit to the right, and here what you see is, price goes up for about 12 minutes or so, and then you get candle body under candle body. So now we know that this should be, if price is going to go lower, this should be our high, because we're now getting candle body under candle body, and price should start breaking below wave one. So wave one goes into a wave two. So it's a wave two beginning at that red candle. Scroll to the right. And here we get a subwave. So what you're seeing, what I mean by a subwave is, you get this candle body down here, and then you get this candle, and then you get this candle, which is candle body over candle body. But it's not over the previous wave body or high, so there's no cause for concern. So if you got short in here, right, then your stop is still here and you wouldn't have gotten stopped out. Now what I'm looking for is to go short under when price starts breaking wave one, because in all of my time trading, I see that there are multiple waves developed throughout the day. So let's get back to this wave. So now we have price coming back down, and there's a gap created between these two candles. You see that by the wedge. Price is coming down. We're now breaking this internal wave. So between wave one and two, we had this pull back, the move down, the pullback. Now price is closing below this. This is good for price to continue to its downtrending momentum. Price goes up, creates candle body over candle body. So this is just another sub wave in the greater context of this wave one to wave two. So if you're short, your stop is 1 penny above this candle or right above this body here, whichever you prefer. And price goes sideways, goes down, creates a new candle body it creates a close beneath this, but it doesn't create a new candle body yet. So we're still kind of going sideways, and then price goes up, candle body over candle body here and here. These candle bodies, this candle body is over this candle body, so price is going back up. Yes, it breaks this wave high. You get a close above, you starting to get candle body over candle body. Yeah, this could be the signature of a reversal, but ultimately, if you're trading this larger wave, then if you're short, your stop is still here. If you're long, you really can't get, if you want to go long, you can't get long until price is breaking this wave right here. So then we see this big pullback candle. You see the gap created by this gold wedge. And we'll just follow this. So price once again ticks even a little bit higher, but still doesn't close above the previous wave to open or its high. And then price starts going down. I'm scrolling to the right. And so it's a very long, slow, drawn out process for price to really move. We got about 70 cents a range from here all the way down to here, 75 cents, 80 cents to here. And finally, right here, you can see price is closing below the previous wave one. So this would be the signal to get short. Where is your stop then? Your stop is at previous wave high. So I'm going to use this wave right here. Here you have candle body, which is underneath this candle body, which is indicated by this wedge. It can be hard to see when you're trading something that's either just 1 penny, 1 cent above, or if you're trading futures where it's just 1 tick above. That's why my script prints these indicators for me. So this would be your place to go short, and you would put your stop in right here, right above this previous wave high. So now we're looking for candle bodies to start printing complete candle bodies underneath this wave one and really start gaining some momentum. And here we go. Price goes sideways, and it hasn't, in this breakdown candle, which broke down below previous wave one, price action essentially goes sideways for 3 candles, but it only retraces about maybe 55% of that. It's a little bit too much for me, but price does maintain kind of like that lower 55% range of the candle. I'd prefer to see that price not retrace much of this body at all, maybe no more than about 10, 15, 20% to be a lot more confident. But our stop would be here, 1 penny above that. And so now we're looking for candle bodies completely under wave one. So this candle, this doji here, this candle body of this doji is completely under wave one. That could be the end of the wave, but it's not. And we get this other candle body now that's also completely under that. So we're just looking for price to continue making waves lower. How do we know when price has stopped going up? We'll know when we see candle body over candle body. That hasn't occurred yet. So right here, this candle body is above this candle body. Once again, that's why I have my signal, my indicator, this little blue cyan wedge is telling me this candle body opened here, this one closed here, and there's a gap between the two. Even if it's a penny, even if it's 1/100th of a cent, it will print it. So if you got short here and your stop is here, we can't really move our stop down yet until we see price going lower. We need to see the end of this retracement. We don't want to see price going above the previous wave high. So this wave two, it's a long drawn out wave two, and it ultimately stops down here, finished right here because this is candle body over candle body. So that ends wave two. Now we need to see price just stop going up. So here we go. This gold wedge tells us this candle body is below this candle body. So our highest candle body is now this one right here, this gray solid one. So this becomes our wave three beginning. And so now price is going down. So at this point, if your stop was here, I would move my stop down to like 1 penny above this. And if I get stopped out, I still made a profit. And so we need to see price now breaking wave two, closing and printing candle bodies beneath wave two. So here we get to close below wave two. Now we need to see candle bodies completely under wave two. This candle body is completely underneath wave two. This is good. This yellow line was a previous gap. I'll go back and show those later. We'll just continue documenting these waves. We don't have candle body over candle body yet, so this wave three hasn't finished yet. So it's now making a new low. Here we go. You see that blue wedge once again. That's candle body over candle body. So wave 3 ended right there. And where does wave 4 begin? We don't know yet until price stops going up and we see candle body under candle body. So wave 4, it actually pushes this wave 3, actually is still reversing. As long as it doesn't go above the previous wave, then the downtrend is still intact. So now we have candle body here, under candle body, indicated by the gold wedge. So now wave 4 would be right here, wave 4 beginning. Scrolling to the right. So now you could move your stop down from the wave 3 high all the way down to the wave 4 high. You need to see price closing below wave 3 in its wave 4 move. We get to close. Now we need to see candle body completely under the wave 3 body. Here we get that. This green hammer candle is a body completely under this, so this is good. The downtrend is going. We've hit another yellow line, which was a previous gap between bodies. And we have candle body now over candle body. This could be the termination of wave 4. It is the termination of wave 4. So wave 4 completed right there. And then for a wave 5, we need to see candle body closing underneath wave 4. Now on a wave 5, it can just be a tail at the bottom, or if it's trending up, it can be a wick. It doesn't have to be a full candle body on the 5th wave move. And so now we get candle body under this doji. So this doji body is underneath this doji body. So technically this would mean, okay, this would be the beginning of wave 5. The high of that candle is, let's see, 47.27. The high of this one is 47.26. So if you had moved your stop down to the high of this candle, you were not stopped out yet. Now here you would have gotten stopped out. But if you're still holding some inventory, then your stop would be back here at the high of wave 4. Okay, so this is looking good. We get this engulfing of this particular candle, and maybe price is going to start moving back down again. We won't know until we get candle body under candle body, but it's looking good. So now we have candle body under candle body. So this candle body is underneath this candle body. So wave 5 actually starts here. Starts going down. We need to see price closing below wave 4 with either a body or a wick. A tail, I mean. Okay, so wave 5, we got stopped out again, but price hasn't gone over wave 4 yet, so we haven't violated the downtrend completely. This is just like a sub wave. So wave 5, we'll mark this one red because it's a failure. Okay, now we have candle body under candle body, and maybe price, after it's finally done consolidating here, hasn't breached the wave 4 at all. So none of the candles have closed. The bodies have closed above previous wave high, which is also a good indication, and there are no wicks above the previous wave high, wave 4. So this candle body under candle body, so maybe this is finally wave 5 beginning, and you can see that you can and will get stopped out unless you're just holding your stop at previous wave completely. But if you're following the process, then this was wave 5. Let's just duplicate that and show that. This was wave 5 beginning right here, and it failed because price went above. This was wave 5 beginning because price was here. Price came back up, so that wave 5 failed, and then we're trying for the 3rd time for this 5th wave move down. See if we get it. And here, if you had moved your stop down to this wave 5, you would have gotten stopped out. if we look, so the high of this candle here is 47.49. Let's look at the high of this. High of this is 47.5. So 47.5, 1 penny difference between this high and this high. This wave 5 is also a failure because price broke above it. So we're going to document this one with red text. And we just keep scrolling to the right. Okay, so now we get candle body under candle body. So, we're in this long period of consolidation, essentially from 9:01 Mountain Standard Time all the way to 9:51. So that's 50 minutes of essentially sideways price action. So maybe this is the beginning of wave 5. Time will tell. And this doesn't go above this wave yet. And here we go. Finally starting to break down and coming into this lower portion of the consolidation. And here we go. Finally, we get to close here below wave 4. So this could be the end of wave 5 unless you have targets lower. So let's just see where wave 5 ends here. So we have complete candle body under candle body. So meaning this candle body is under the wave 4 now. So at some point, this wave 5 will come to an end. As soon as you see candle body over candle body, that wave is ended. So let's check this one. This green hammer, this closes at 47.76. This gray candle opens at 47.79. So that's 3 cents higher. So this wave 5 ends here on this green candle right here. So I'm going to zoom out, move this out of the way. So here's the wave 1 down, pull back, wave 2 down, pull back, wave 3 down, pull back, wave 4 down, 3 wave 5 failures, but it didn't go above wave 4, the wave 5 down here. You see some other yellow lines down here. There are gaps in previous days. So let's just scroll to the left and look at some of these gaps. So it's a gap right here. So that's at 47.2, and 47.2 got taken out already. And then we got 47 and 46, and we'll just keep looking at those. So here's the 47. That one got taken out, that gap right there. Let me zoom into this so you can see it. That gap right here between these two bodies gets filled. At 46, approximately 60 to 61, there's a gap here. And then down at 46, between 46.45 and 46.50, there's 2 gaps here. Let's see if those got taken out. So 46.5, yep. So those 2 got taken out. And then I'm just going to go to the right, and you can see that, wow, there's a yellow line all the way down here. It's all the way down at 47.50. So let's just backtrack to see where that gap came from. So right here on April 8th, when the market opened up, there's 100 shares that traded right here on this little just flat line. So one lot traded right there at 47.51. So if we scroll so there's a gap between this body and this body, even though they're just, really dashes, there's a gap all the way down there. And looking at today, price on this candle comes all the way down to 47 or 45.72, 1 penny away. And then over here, 45.72 on these candles right here. So once again, 1 penny away from that gap. And oftentimes, if you get a price rejection, just 1 cent, or if you're trading larger futures, 1 or 2 ticks, and price fails to fill the gap, then that can be a spot for a reversal. Let's see if I covered all these topics. So we talked about waves. We talked about when to get enter and where to put your stops. So we definitely covered where to put your stops. So in terms of entering a trade, if you're a more conservative trader and you need to see price essentially breaking the previous wave, well, you can't go short until price breaks this wave one. If you're more of a risk trader and price is going up and then price starts to then come down, if you want to take the trade in this area, you're fine to do that. I typically would recommend waiting to see candle body under candle body. So take that short here with your stop there. Where would you add? So let's say you got short somewhere in here, or you got short in here and you want to add to your position. I would say definitely add to your position when price is breaking the previous wave low in this particular case. So when price, you can put your limit order in. So when price breaks these bodies, you just essentially get in. You would have gotten in right here as price broke these bodies either here or here, and then you'd have to put your stop for the add right there at above the previous wave high. And so yeah, there's an internal wave right here. A little subwave. Let's see, gaps valid until filled. So we've documented these gaps in the past with these yellow lines and the ones I drew in blue, the blue lines in pre-market that were already filled. So you know where your gaps are because your gaps are definitely targets. Engulfing bodies. One of my indicators is, it's just a custom indicator, it prints an arrow whenever the body of the candle engulfs the previous candle. So here you can see that this candle body opens here. It's about 1 or 2 cents above this previous candle, closes below it. So this candle body engulfs this entire candle body. I don't care about wicks. I don't care about tails. All I care about is bodies. You could say the same thing here. This candle body opens parallel to where this one closed, closes lower, it's engulfing. As long as it's equal, the price, then it's engulfing for me. An up candle here, this is a 1 or 2 cents open below this one, closes here, so you get this green arrow, so that's engulfing. And you're looking, just whatever it is you're going to trade, just trade something that you can consistently see that has 5 wave moves every single day. I'd say look at, in my video yesterday, I said 19 out of 20 days should have 5 wave moves. It doesn't matter what you're trading. It can be a stock priced in this, $45 to $50 range. It could be a stock priced even in a much lower price, or even if you're trading like micro NASDAQ futures, which is something I trade, just make sure that it's got a lot of waves in it every single day. And here in the futures, you can see waves in here. So pretty choppy day on the futures, but there are waves in there that are tradable. Let's go back to Delta. And that's it. So once again, the catalyst for kind of the idea for possibly trading a stock like Delta would be simply for the fact that there were earnings reported this morning or before the market opened, or maybe trading a stock the following day if earnings were reported after hours before the market opened up. Thanks for watching and have a great day.